All right, welcome back to Market Day Report. I am Scott Shellady, still Scott Shellady, also known as the Cow Guy, and it might be the black and white jacket that might give that away. I don't know, but happy Thanksgiving. We're all in a good mood here. Why don't we see if the markets can keep us in that good mood? I'm not quite sure they can, but let's take a look. We'll start with corn. Ouch. 5 1/4 cents lower in the D's contract, 662.5. 4 3/4 cents lower in March, 665 1/4. So we're off between, say, 4 and 5 cents across the board. Actually 3 1/4 to 5 cents across the board when we talk about corn. So not giving the bulls any reason to dip their toe in just yet. How about soybeans? Well, that's a better market, 3 cents higher in Jan. 14.31 1/4 is last. We've got March up 2 cents right behind it, 14.35 1/4. How about Chicago wheat? What's on the docket for the Chicago wheat market? And it's lower, 6 3/4 cents lower in that D's contract. That's going off soon here. 796.5 is last. But let's look at March. That's where we got some losses. 8 1/4 cents lower. Now 9 1/4 cents lower there. 8.12 3/4 is last. We're about 8 cents off the lows. May is down 9.5 cents as well. 8.22 even. All right. Anything change when we go to the hard red wheat in Kansas City, the old HRW down there? Well, it's lower, but not by as much, not nearly as much. March is off 2 3/4 cents to 9.21 even. May is off 2 3/4 cents to 9.15 3/4. If we take a look at Minneapolis, where it's a little bit chilly probably here today, March is off 1 3/4 cents up in the spring wheat Minneapolis contract. 9.57 is last. May's at 9.62, and that's down 1 1/4 cents. And then finally, we got to check in on the old cotton. That one was really hurting here this morning. Come back just a tad, 286 points lower in that D's contract to 82.30. 300 points lower in the March right behind it. 80.78 is last. All right. I'm happy to announce that we've been joined by Chris Swift. He's one of our regular guests here at Swift Trading. Thanks for coming into the show.
Good morning.
All right. I haven't given the bulls really a reason to buy anything today, have we?
No, it's kind of working on towards the end of the year. You know, everybody's going to be doing some window dressing, trying to get the end of the year wrapped up, and there's not a lot of export movement that has been happening. We've got really low water river barge levels, so I don't think there's going to be a great deal to happen between now and the end of the year.
And as we've spoken at the last two segments, we can kind of get a little bit of a volatile session sometimes this time of year when you don't have maybe the heads of desks out there trading. Mm-hmm. Maybe they leave it to the junior in charge, and then the volumes aren't that big. You know, that all leads up to a pretty volatile market sometimes, and some mistakes can be made.
It can. You got to pay real close attention when it gets down to the holidays like this.
Right, and it's just one of my favorite holidays, so I like it. But what about the economy in general? I mean, I think I've been asking each of the guests this morning where you stand on how things look going forward for the next year. You hear global recession, you hear a U.S. recession, you hear a lot of different things, and I always couch it like this, Chris. If the consumer's got no money, how much is a bushel of corn? How much is a gallon of gas? What do you think?
Well, I think there's still a lot of money out there in the system. When you look at it from that standpoint, you see the SUVs that are driving around, and they're still lined up at the gas station.
I was racing a lot of them in this morning.
Yeah, so I don't think there's much room. We look at encouragement of production. What is there going to be in 23 that's going to encourage production? Are we going to see this administration encourage more refining, or are we going to see them shut it down even more and try to go to the more electric? We know that the drought is very much impacting everyone right now, so how is that going to encourage farmers this spring to plant, livestock producers for our hay problems? So we're a little bit more concerned with our production aspects than we are just the actual economy in general.
I would agree with that, and I'm going to throw one thing at you before we go to break. I think, you've seen the demand side when it comes to your 401k get crushed. Mm-hmm. You've seen your house price, maybe crushed is too big of a hyperbolic word, but it's definitely lower, right? Mm-hmm. We've seen a lot of other parts of the economy suffer here as of late, your bond portfolio as well. I think we have to watch jobs. Mm-hmm. Because if we start to see those roll over, and there's a lot of folks out there saying that that's going to happen, well, then the consumer doesn't have any money.
Right. And the unfortunate thing about that, then what do? They go on the government tit. So.
Right. So we'll leave it on that one. We're going to go away. We're going to pay a few bills. We're going to come back and talk more with Chris Swift from Swift Trading after these messages. All right. Thanks for joining us. I am still the Cow Guy, and that's a cheap segue, and I say it with a smile. I'm looking at our livestock prices. Why don't we do that? Let's go over and take a look at live cattle in Chicago and see what's happening over there. Steady a little bit better. If I was on the floor and you called me up, that's what I would say we've got happening right now. February's up 62 cents to 156.47. We've got April up 57 cents to 159.82. But you really got to focus in on the range of the day, folks, and it's about 50 cents, maybe just a little bit more than that. So when you have a small range on the day and then a small change on the day, generally speaking, that means that market is out to lunch. And so I'm going to call the live cattle market definitely gone fishing. All right, let's take a look at feeders. What have we got to go over there? Well, they got a little bit better of a bump here today. We can talk to our guest analyst about that. But Jan's up $1.67, 182.42. March is up $1.70 to 184.82. So we've got a decent board when it comes to feeder cattle. And then finally, let's take a look. Lean hogs were kind of scatterbrained last time we checked. We've got Feb up 80 cents to 90.35, and April's up 62 cents to 95.55. All right, Chris, we had a cattle on feed report. Is that kind of bleeding through here a little bit?
A little bit. It's very interesting because they showed a down 2% year over year, but when you look at month over month, they were up almost 500,000 head. So 11.7 million on head versus 11.2, and then that maybe probably next month, if we don't have any more better marketings than what we've had, we could keep that level elevated. And we don't look to really have it too bothersome unless we get below 11 million head on feed, because our cow slaughter is so elevated right now that that's masking the lack of fed cattle slaughter out there.
I don't know about you, but we said this maybe, I don't know, maybe it was on the radio show this morning, but my $250 grocery bill every 2 weeks is now like $450.
Yeah.
It's almost doubled. I mean,
yeah.
There's still a lot of high prices out there, and it doesn't seem to be kind of giving the consumer any bit of a break.
They're not, and retail beef is still very, very high. Yep. And what we're going possibly to be working on now is just margin between the sectors, because I'm not real sure you can push a higher price out to the public right now and expect it not to kill, further demand.
Right, and again, I want to stress, I think it's about jobs. I really think that's one of the last things we have to see either get better or get worse. But once you find which way that arrow's pointing,
right,
I think that's where we're going to be going.
Yep.
So, all right. Love having you on. Really appreciate it. Have a great Thanksgiving.
Thank you very much.
It's one of my
Scott.
favorite holidays. Chris Swift, Swift Trading. Listen to this guy. He knows what he's talking about. And you know who else knows what she's talking about? Janet Atkinson. There you go.